Hi, everyone. Today we are going to be working on lesson 5.4, and that's all on petty cash. So, by the end of this lesson, we will be able to prepare a petty cash report, establish a petty cash fund, and replenish a petty cash fund. So, what exactly is petty cash? Well, petty cash is an amount of cash kept on hand and used for making small payments. You are going to use petty cash when writing a check is not time or cost effective. Example, you work at a restaurant, you run out of napkins, you need to run to the store and grab some napkins right away because you need the napkins to run your restaurant. So, you're grabbing a small amount of cash out of a petty cash fund and going to the store to buy those napkins. Petty cash is a new account that we haven't talked about before, but it is an asset account. And because it's an asset account, the normal balance is going to be a debit. So if you're going to set up a petty cash fund or establish a petty cash fund, here's the transaction. January 19th, paid cash to establish a petty cash fund for $100. So, what we're going to do is put the date. Petty cash is going to be debited because that account is going to go up. Cash is going to go down because we're taking the cash out of one account to put it into the petty cash account. So that's credited. And then the source document here is going to be a check. Now, if you use the petty cash fund, you need to fill out a petty cash slip, and that's just going to serve as documentation that you used um, cash from the petty cash bin, okay, or the petty cash box. So the petty cash slips are kept in the petty cash box until the fund is replenished, and typically you're going to do that about once a month. So at the end of the month, you're going to replenish the petty cash fund. What you're going to do is fill out a petty cash report. Now, sometimes you have not as much money in your fund as you should. And so that would be cash short. Or you could also have more money than your account is supposed to have, and that would be cash over. So the custodian is the person who's in charge of the petty cash fund, and the custodian is going to prepare the petty cash report when the petty cash fund is replenished, and they are going to indicate whether you are cash short or cash over, and then put the proper amount back into the fund again in order to replenish it. So, this is how we're going to fill out a petty cash report. You're going to start by putting the date at the top and the custodian name. Then, what you're going to do is you are going to write any payments that you made. So, anything that you have a petty cash slip from, you are going to put here. So, we used petty cash two times this month for a miscellaneous expense $20 and advertising expense for $14. You're going to add these two amounts. Okay, so you're going to add $20 plus $14. That's going to give you $34, and you're going to move 34 over here as well. And typically I try to mark this up, but I can't do that right now. You're just going to add these two to put the amount here, and then you're going to then move the same amount over. Now, the recorded amount on hand is going to be 100 minus $34. So put a little minus sign here, and then that will give you $66. And then the actual amount you have on hand, $65, and they will tell you that in the problem. That is then going to leave you either cash short or over. So if it's a positive, you might want to put a little plus sign here. If it's a positive, it's short. If it's a negative, it's over. Also, if it's a negative, it should go in parentheses. Okay. Then you're taking 34, you're adding. If it's positive, you add. If it's negative, you subtract. And that will give you $35. And that's the amount that you have to replenish. Okay. This is something that a lot of people struggle with. So, if you are at home and want some additional help or just a guide to use, I have this PowerPoint on my website, and you can print out this slide and put all of the little operations in. So, this would be a plus right here. This would be a minus. This would be a minus. This, it's short, it's positive when it's short. So you would put a plus sign here to give you the amount that you actually need to replenish. Now we have this new account that's called cash short and over. When we are short, we debit cash short and over. If we're over, we credit cash short and over. So this new account, it doesn't have a debit or a credit balance, although it's normally a debit. And the petty cash fund is more likely to be short and over. So that's the reason why. Now, journalizing this transaction is a part where people tends to really make mistakes. And the reason why is because when they see the transaction, petty cash, dealing with petty cash, they think petty cash, the petty cash account is going to be affected, but it's not. So replenishing the petty cash fund does not affect the petty cash account. You are ultimately taking out cash. And so when we journalize that, this is what it's going to look like. So here's the transaction: pay cash to replenish the petty cash fund for $35, but we have to journalize all of the expenses that we had, and they were on the petty cash report. If you look back a couple slides, all the expenses that you have are on the report. You need to journalize that those accounts are affected. So pay cash to replenish the petty cash fund for $35. The expenses were miscellaneous expense and advertising expense. Cash short and over was $1. So to journalize this, we're going to put the date, the 31st. Then we're going to list all of our expenses. So miscellaneous expense, advertising expense, and cash short and over. Then what we're going to do, sorry, I can't move this bar out of the way. Then what we're going to do is put for cash, it's a credit to cash, the amount that we are replenishing. And the source document is a check. So we're putting all of our expenses plus cash short and over. And then when cash is short, we credit cash. We debit cash short and over. If it is over, we would credit.